Hey traders, this is Christian from Hertz Tribeca Trade Group, and today is Wednesday, July 7th, and this is your end of day recap. Risk disclaimer in front of you. Everything that we're going through in this video is for information purposes only, not giving out any advice or recommendations. This video is for education purposes only. If the video happens to be a little bit blurry, YouTube takes a little while to render the high definition video, so just give it a little bit more time. So what did we get today? Besides, the Fed minutes was the big thing that seemed to be people were waiting for, even though that's information from 3 weeks ago, is what I always try to really make sure that everybody is aware of. That is that today was not a Fed meeting, it was the Fed minutes. It's just information from 3 weeks ago, and we know that we've heard a lot more newer information from every Fed speaker that has been speaking over the last couple weeks. So yeah, old information. But nevertheless, the market likes to kind of wait for some of these things, and that was the major thing for this week and a holiday shortened week. But let's get to the performance in the indices. SPY was up today, up close to 40 basis points. Nasdaq was up 20 basis points, but gave back some of those overnight gains for whatever reason. The market, the Qs were really rallying into the open from early pre-market. So that always to me invites profit takers, especially when this market is up as much as it is, and the Qs are pretty cooked in terms of when you look at overbought. The RSI, Dow didn't do much of anything, right in line with the S&P. Small caps continue to be a problem area for now. They were down about 1%. Micro caps were down a little bit more, down 1.5%. The bonds continue to rally, up about 90 basis points. Did look like somebody was trying to take the other side of that today. There was some put buying going on in the TLT, so looking for rates to go maybe a little bit higher or to kind of come off some of these levels that we've recently rallied to. Then the VIX was down a little bit today. Best performing sectors a little bit different today. Metals and mining, steel names were strong today. That figures perfectly because I did sell a steel name right on the lows yesterday, so that's how that works sometimes. But they were your best performing group today. The home builders were also strong today. Nice to see that group remain decently strong. The industrials were also up 1% today. So again, also good to see something different there too. If you look at the underperformers today, a lot of higher beta groups. So before I go any further, let's look at a couple of the areas that I mentioned. The S&P, we're now what in the S&P, right? We are now, where's the RSI for this thing? RSI is almost a 70. The Qs we know is what, is a 77. So even though they came off the highs today, they're quite cooked. 77, right? So we are seeing that, and then that overboughtness continue in the Qs. For IWM, again, very sideways. We're basically just back to where we were 2 weeks ago. There is that red line, virgin point of controls coming up, but sideways, right? And that's how it's been. Above the 50-day moving average, below the 50-day moving average, above, below, above, back out, 50-day moving average, back to the top of the range, and back to the middle. So, if you've got a strong consensus, a strong feeling on the small caps, congratulations, because they really haven't gone anywhere in 6 months. They just keep going back and forth. So this week, as well as towards the end of last week, they were a bit weak. So right now it's kind of cycling through. Will we get, stronger IWM? Probably, they're probably a little bit oversold. I do see a couple other things to the downside. There's one virgin point of control down here at, I think at 220. I know Thinkorswim is jumping around with this. Oh, that's been taken out. So yeah, I would maybe watch the lows back here, 221, and see if that kind of bounces, or see if we can kind of bounce from here. But let's also just look at this IWC ETF, which has been going down a little bit faster, the microcaps, but still, it looks very sideways to me. All right, so that's that's what's going on in the small caps. So again, just different markets going on, right? Qs right now have the strength, S&P in the middle, which I would still classify that as very strong, and then the small caps not so much, right? Breadth continues to be a concern. At one point, it was really ugly today, but things came back, and you had for the Dow 29 advancing names, 9 declining. You had 334 S&P names advancing. So the good breadth here. Just when you get to the Nasdaq, and when you get to there's a lot of small caps in there. So again, not great breadth. But at least in the S&P, you saw advancing. New 52-week highs. This looks okay to me. 14 new highs, no new lows. On the 4-week side, there are some areas that are showing some weakness. So let's talk about a couple of those areas. I mentioned the home builders. Right, I always like to look at the best performing group, or one of the best performing groups for the day. Still underneath the 50-day moving average, but getting closer. Right, XLI Industrials I mentioned was up 1%. That did take back just barely the 50-day moving average. And a couple names that I keep watching in this group are Caterpillar, which trying to make a little bit of a higher low here. And notice this big value area for the month of July. Sometimes, not all the time, but sometimes when we have this type of value area, it equates to a lot of sideways action. And then once the moving averages kind of catch up with the recent move to the downside, sometimes then we can kind of begin to recover. But I'll continue to watch price action. That's just what I think, that it might just take a little bit of time for some of these names that were in big uptrends, like Deere was in a big uptrend for a while. Once it breaks, sometimes it spends some time going down and then sideways, and then consolidating before it's ready for the next leg. That's typically what I'm kind of leaning towards. And you could see how the top of value, which is right around 359, is very close to that 50-day moving average. So that's something that I would be watching. And being that's kind of away, decently away. The other thing that you could do is, if you really like Deere, maybe use the low from yesterday as a level to trade off of, if you don't want to wait for that 50-day moving average. But my guess is we see more sideways action for the industrials. But again, it's just a guess. Home builders, we talked about. Also metals and mining. There's still, again, back to that 50-day moving average analysis, below the 50-day moving average. Again, another group that was very strong for the first 5-6 months of the year, and even going back further than that, also below the 50-day moving average. So these groups are trying to kind of come back and recover and hang in there and recover a little bit, but it's just taking a little bit more time. So what was particularly weak today? Well, the ARC group, right? The high growth was down 2.3% today. It's just it's so odd to me how different sometimes what this ETF can do comparative to the whole market, right? You look today and the S&P's up 30 basis points, the Qs are up, and this ARC Innovation ETF, high growth names, down, just getting smoked, getting down 2.3% for the day. Big underperformance there for the day after stalling out here. And I think we kind of stalled out here. Where did we stall out on the 1-hour chart? I think it was at one of these Virgin point of controls. Actually, we went a little higher than that. For some reason, I thought that there was another one that was taken out. But, just kind of interesting how that works, right? Biggest underperformers in this ETF for the day. You had a few of the gene editing companies. Beam was down 13%. A couple of those names: DraftKings, Skills, Palantir. Really, some of these names getting hit pretty hard. Edit was down 5%. Another one of those. CRISPR, which I got out of. I think at the beginning of last week, I want to say. So looks like that was the right move for now. And then just a bunch of other areas. But that is the story. And another thing that I noticed for the day was, and by the way, clean energy stocks were also down. Decent reversal there in the solar stocks. They started the day, they were up about 10. They were up about 2% today. on the open, and they gave back gains today. So you have a reversal bar there. The biotech group continues to be weak. Right, just interesting, what's been going on here. If you look at the XBI, right, we talked about this in the weekend video, right? In the TTG weekend video, we talked about how this biotech group has been showing relative weakness, and meanwhile, the healthcare group is doing the exact opposite, is breaking out. So, like, what a difference between groups that are almost, and there is some crossover here because there is some biotech in the XLV ETF, but look at the volume going on here in the healthcare ETF, right? Really, really strong and going the opposite direction. Let me see if I can just associate. I do have a relationship chart here. Sorry, I did not bring it out yet, but I just want to check on this relationship here. If we do XLV XBI, yeah, you could see this. So this is trying to break out, right? Now, there's a couple other relationships too to look at, right? But just interesting to see some of these things take place. Similar groups, one is completely breaking out to the upside, healthcare, and the other one is breaking down, biotech. So I guess you could maybe associate a little bit of risk off with that. The semis also continue to be weak, which I don't really like. I'm more of a fan when the semis are really, really strong, but right now they're a little bit weak. Here's the ARK ETF. So I added a couple of these ETFs. The other thing that I noticed too is just more of the low volatility equities. It appears that people are moving a little bit, rotating. Investors, funds are rotating in more into the low volatility equities versus the high beta. So similar, not as bad as that ARK ETF, but high beta equities were down 1.3% today, and low volatility equity ETF was up close to 1%. Again, that's pretty decent difference. So again, it looks like there was a decent rotation going on within those groups. And if you look at this, right? So if you look at SPLV, this looks very good, doesn't it? Same thing with USMV, which is another ETF. It's a little bit different, but this is minimum volatility versus low volatility, right? And then you look at SPHB, and you could see, now breaking below the 50-day moving average. So round and round we go in terms of these rotations. So, keep these things in perspective right now. It's funny because whenever I post some of these things, there's a lot of doom and gloom that seems to go around. So I thought I would put this chart together. This one I did put together. And this is going back to when this ETF first started back in 2011. These two ETFs, SPLV and SPHB. So what I did is I put low volatility equities in the numerator and high beta in the denominator, right? So you could see that there's been various times over the last, since 2011 where low volatility has performed high beta, right? This happened in 2011 and 2012. This happened in 2015 to 2016. And it happened, obviously, low volatility outperformed a bit, during the beginning of last year where we had the pandemic too, right? And since then, high beta has been really outperforming over the last year plus. But you could see over the last couple months, it's been going sideways and low volatility is starting to outperform. Now, what do I have? What's that yellow line going through the middle? Well, that's the S&P. The reason why I put the S&P in here is because automatically when I post that type of a chart, the doom and gloomers come out and they say, oh my God, here comes the market crash, right? Like, oh, this is the last cycle of the bull market, right? When you start to see low volatility equities outperform. It's very interesting what goes on Twitter. There's a lot of, I get from a couple of people every month, either I see it or somebody sends it to me, somebody overlaying some area of the market with the 1999, 2000, 2001 market, and they overlay it, and then they try to match it up and say, this is what's happening next. And then, of course, you see the rest of the chart, and you see like a big, a big market crash. Now, I've been seeing this. Somebody's been doing this. Someone different has been doing this every couple of months, and it doesn't work that way, folks. You can't in my opinion, you can't overlay a little bit of one market versus the other, and then superimpose 1999 and 2000 and say, here comes the market crash, right? If you're doing that, my opinion is you're doing it wrong, right? To make those types of forecasts that we're going to have a crash, and you see this, like I said, every couple of months. So, eventually there will be a decent market dip, right? We say this all the time. There's usually a correction or two, or sometimes three, even in a year. Stocks go up and they go down. Over time, they usually go up, but there are market correction and market dips. Do not be alarmed at this. Don't think just because if there's going to be a market dip, that it has to be a market crash. It's just funny that the way, again, as I said at the beginning of this quick topic, it doesn't always have to be market crash, right? Just because the market gets overbought. So guys, try to put things in perspective, right? Again, we'll see a lot of signs before if something is going to happen like that. You have to break the 50-day moving average first. You have to break a lot of support. So trying to predict these things just because the market is overbought is kind of a fool's game. But I'll let people on Twitter continue to do that, and I insert my opinion here and there. So why did I show this? Again, let me get to the point because I think I may have missed it. But take a look at the different times where low volatility equities have outperformed. Where on this chart, when you overlay the S&P, is the big crash when that happens, or the big correction? The market just rotates around. Sometimes there's just other areas of sometimes the different investors like different areas of the market. But you could see, where is the crash when low volatility equities outperformed in 2011, 2012? There was a little bit of a dip, but where are we now versus that dip, right? What about here in 2015 and 2016? Okay, we went sideways a little bit, had a little bit of a market correction, but look at what ensued afterwards. Right? So put these things in perspective, right? It doesn't mean right now, if the low volatility areas of the market, and if you want to look at these ETFs, it doesn't mean that that a market crash is going to ensue. It's just that the market gets to like some of these areas a little bit more sometimes, right? And you could see what's in here. Names like Costco, names like Sherman-Williams, names like Roper Technologies. So these are not like really big bearish areas of the market. Fastenal, right? Granger, Oracle had a big day obviously today, but there's just other areas of the market, right? So, and if you want to look at USMV, right? What were Otis, Clorox. Okay, maybe you could say that name is defensive, but Sam Adams had a nice day on an upgrade today. Zoetis, EXPD, which is a transportation name. Okay, so it's just some different areas of the market. All right, and if we look at the last one, SPHB, right? Things like Penn, ENPH, some solar names, some the travel names have been continuing to come down, and we're still seeing, it's been this way I think for a little while now, that we are seeing a lot of I hate to classify them this way, but it is what it is. We are continuing to see some of these reopening type trades really get hit pretty hard. Any travel names, casino names, anything to do with that has been getting hit pretty hard, and a lot more of the stay-at-home type stuff has been performing pretty well. So, we don't know what we're going to get with this, what else we're going to see with this coronavirus. Hopefully not anything else more impactful. But for now, we're definitely seeing a rotation out of the reopening stocks. Now, again, that could change and things move. And, I'm just going over one day's price action in terms of the low volatility equities. But kind of interesting and I think kind of notable. So, bottom line here, it is concerning that the market breadth is still, challenged right now. And again, that means it's a little bit harder to trade, right? I've given various examples over this, since we started to see this breadth tick down. It's just a lot harder to be a stock picker in this environment because more stocks are going down versus up, right? It just is what it is. Also, with these heavy rotations, right? Right now, it just, today, if you look at my trades for the day, I just was doing, even though I've got a decent amount of trades in here, I've just felt like today I was doing a lot more observing, right? You don't have to get every single move correct. If you want to just, sit and observe for the day, one of the comments that I made earlier today too was, hey, if I'm not seeing great signals, then wait for your pitch, right? Wait until you are seeing some better signals. And that's what I kind of did a little bit today. I did some day trading stuff. I actually bought a little bit of S&P puts when the market breadth was really ugly this morning. But like I said, that did improve. A couple areas that look pretty good to me. And again, these are slower moving areas of the market. But hey, if we're going to see these big rotations, I don't mind staying in something like a Medtronic that looks pretty good to me. Maybe this thing can move up to 132, 130, 132, and AWK, right, which is America Waterworks. Again, looking for maybe a move up to 167, 170, and if the market's going to act a little bit more defensive, what's wrong with making money a little bit slower, right? It may not be exactly what I want to do. Would I rather be in something that's going to move really fast, and reward me very quickly? Sure, and that was a nice move yesterday in Amazon. Amazon had a little follow through today, but didn't do much today. So, a couple of things I think are going to happen with Amazon. Either it's going to continue to get a little bit more overbought, and it is overbought now. And it may kind of come in a little bit. So I still have some trades on. I rolled several profitable trades yesterday in Amazon. So now I'm at the point with the trades that I have on, I am looking for, a big winner because I've already locked in a lot of gains with this. So we'll see what it does. Could it revert back a little bit? It could. And I think that'll be a good place to kind of buy because it is what it is, right? This is in a breakout area right now. So little consolidation or back and filling could happen here, but I've got trades on too if this thing wants to just continue to blast off to the upside. So that's my thought on that. And I think we'll leave it here for the day. But remember this market, let it do what it wants to do. If it wants to move into some slower areas of the market, you can make some money in those too. A couple other things today that, some other trades that I'm in, like CrowdStrike, was fine, up 1% today. I almost got my second target in this one. A couple other names that I'm in just didn't really move too much. Right, Datadog was actually finished down on the day, but we'll look at this one. Gave back a little bit of those gains, but as long as it kind of stays above this top of value, I think it's okay. Blackstone, which was the name I sent out last night on Twitter, nice move today. I talked about how it was a very shallow dip. Right, again, another one that's a little bit slower moving, but a really strong looking trend. Right, so there's definitely some things that you could capitalize on here, and they're honestly a little bit easier to manage because some of these higher beta areas, man, the bottoms just sometimes drops out of these things, right? Especially the ones that get pumped on Twitter, right? This is one that I saw getting pumped on Twitter about a week ago. Well, look at what's happened to it, right? Some of these things are going to be kind of a little bit fake moves, right? They're going to go up because they're getting pumped a lot on Twitter, and there's going to be short-term buyers that come in. But look at this thing fall apart. AMD was another name that really got hit hard today, down 4%. Now, again, just giving back some recent gains, but you got a level to watch here, 90 bucks. That'll be something to watch for tomorrow, right? So this is the 1 hour chart and the value area. Notice that it failed here at this 95 level once, twice, and then still looks pretty weak here in the after hours market. But I would watch that 90. Also, Nvidia, finally a red day on this name. Here you got a nice defined level too. If you've liked buying the dip over the last couple weeks in Nvidia, well, you got another little one, and you got some defined support. So 812 would something I would definitely be watching for tomorrow if you're looking to buy the dip in this name. All right, guys, little dip anyway. We'll leave it there. A bunch of other charts to go through, but I think that's good enough for now. Have a great night, everybody. See you tomorrow.